All right, so day 2 of my journey to a stock market portfolio of $500,000. All right, so my portfolio total balance in Questrade increased by probably $60 from yesterday, and mostly, as you can see, my equity in my margin account went up to $7,400. It should be around $12,000 when most of my stocks rebound, but mostly my TFSA dropped. I think yesterday was over 43,000. Today it's at 42,990, and it's mostly because of Teva Pharmaceuticals that took a drop today of 10%. So as you can see today, Teva dropped it closed at 7.06, but the lowest of the day was 6.93. So this is a stock that I'm really doing bad with because I bought it several times. I think I bought it initially at 18.5, and then another time at 15, and then another time at 8, and I think that's it. I don't want to buy any more of it. I think I have about 500 shares of Teva, so 200 and 300. So 200 of them are in a covered call trade, and then there's 300 that I don't know what to do with because my average cost is so high that I'd have to pick a strike that's very far out of the money, and the only call premium I can sell, I'll have to go like a year out, and I won't even collect much. So either I keep buying shares of Teva to reduce the average cost so that I can pick a strike price that makes sense, that gives me premiums, or I sell at a strike that's close and just take the risk and hope that come expiry date, the stock does not surpass that strike price so that I'm not forced to sell or let go my shares at a price lower than my cost. What's sad to see though is if you look at Teva, if let's say you wanted to buy the call option, just buy it and then sell it in the future if it goes up in value because you think that it's going to increase over time. So if you go the furthest out, which is January 2021, and you look at the $5 strike, it actually only cost $3.20 to buy that call option. The option table is suggesting that come January 15, 2021, Teva will be trading at around $5 plus $3.20, so at about $8.20. So it was trading at $18 like a year ago. So I think that's like a really great deal. If you think that in 2 years Teva is going to be trading above $8, you could buy the option at $3.20 and then just wait, hold it for 2 years and see what happens. You could probably, if it comes back to $18, you could quadruple or make 5 times your investment. But I don't want to get into buying options anymore. It's something that I used to do, and I don't think it's sustainable, or I can't be consistent because there is a small chance that it stays at 7 or actually goes even lower. I mean, it's a pharmaceutical company. Anything can happen. I don't want to wait anymore to make a profit, even though this would be a really good profit. So it's a strategy that I've dropped. But now I have to deal with the covered call position that I have on Teva because I'm not able to find premiums to sell because they're so low. Or I have to buy more Teva shares, but I'm not sure I want to have more than 500 shares of Teva. I think it's enough. So I'll figure it out come August 16. So I like this Grubhub that I bought. I mean, when I bought it, the stock was trading at 74.45, but I sold a cover call at a 70 strike price and I collected $7.70. So my cost on this stock was 66.75. That's my cost. That's my purchase. That's the debit that came out of my account when I got into this trade while the stock was trading at 74.45, and my max potential selling price is $70. So I would make a profit of the difference. So right now it's trading at 69.72. So because it's lower than my strike price, I'm going to end up keeping the shares. So I keep the premiums that I collected, of course. And now what happens is I could come August 16, so next week, I can sell another call option. If Grubhub is trading close to 70, I'm going to be collecting a very good premium. Now, if it's trading above 70, I could probably just get out of my position, get my money back, and made the profit that I was planning on making. But let's say I decide to sell another call option. In fact, if I want, I could buy the current call option right now and sell, let's say, September 20th expiry date at the same strike price. I could collect $2, or let's say $2.15. So $2.15 on a 70 strike, that's 3%. So first month I would have collected 4%, and now second month I could collect another 3%. That's if I make this trade right now. That's if I buy the current option and then sell the next month's option right away. But most likely I'm just going to wait until August 16 and see what happens. because I don't want to pay $235 to buy it back. I'd rather have the option expire worthless and then maybe sell the next month's option at $3 or $4 and keep all the premiums. We'll see. But this is why I love the covered call strategy. As you can see, while the stock is trading at 74, it only cost me $67 to get in. Plus I'm making a profit, or I'm generating an income from it right away. The only thing that sucks about it is when the stock goes much, much lower. Then you're forced to either choose a lower strike price and hope that the stock doesn't surpass it, or buy more shares of the stock so that you can choose a lower strike price without worrying about getting exercised at that strike price. So Macy's was a trade that I placed yesterday. It's doing well. It's going back up. It ends in 2 weeks. CHK also dropped very hard today. It dropped 10%, so that's killing me. So that explains why my TFSA dropped today, because of Teva and CHK. And you'll notice today a lot of Canadian stocks dropped hard. I mean, SNC 8%, Vermilion Energy 6%, Crescent Point Energy 4%, Husky Energy 4%. A lot of energy companies actually. CVE, Cenovus Energy 3%. FTN, my favorite dividend stock, 3%. So I don't know what's going on with the Canadian stocks. They're all dropping as well. But I mean, could be some buying opportunities. If you notice, most of my positions are right now in US stocks because they have better premiums. Although Crescent Point Energy is a good one. I've traded Crescent Point Energy twice because of its premiums. It has pretty good premiums. I guess I could get into it, but today I didn't buy anything because of my buying power and my maintenance excess in my margin account. It's getting too low. I don't like to go lower than 5,000 maintenance excess, because then I could get placed in a margin call and I have to contribute money to cover or sell something. So since I don't really have anything that's worth selling right now, so I didn't buy anything today just because of my buying power. I'll wait until the market rebounds or until I contribute more money. So the Activision trade that I placed yesterday is doing well as well. It went back up. It actually went over 47, but hopefully by the end of this week I can close it out for max profit, which is about I think about $1.70. So I got a 45 strike. Yeah, so $1.34 is my max profit on this trade in a week. Dell was trading at 48 I believe yesterday, but now it's climbed back up to 50, so that's good. See what happens by August 16. So I have a lot of options expiring August 16, but it looks like most of them will be below the strike price. So I'm going to end up keeping the shares. So if it's not too far from the previous strike price I was selling the call option at, then I could sell another one at a decent premium. So American Airlines, for example, see right now it's at 28. My strike price is 31.5. So this one will probably not be a very good premium. So the first month I collected, well, it's not even a month, I think it was 3 weeks, I collected $1.22. But now if I want to do the same thing for the next month, so let's say September 13 at a 31.5 strike, see, I'd collect like 30 cents or $30, while the first month I collected $122. So you could see the difference because the stock dropped, but it's still not bad. It would be about a 1% return in 1 month. AMD still has value. So same thing, if I wanted to do the same thing with AMD always has high premium, so I'm not worried about AMD. But my last strike price was 30, so if I choose, let's say I go for September 20th, but also choose a 30 strike price, I could collect about 90 cents. So that's not bad. 90 cents on 30 is about 3%, so that's perfect. So I always like AMD because of their high premium. So even if the stock drops, which it did, it's trading at 28.8, while I bought it at 3.3, I could still make 3% per month from the stock. So Bristol Myers is not doing so well. My true cost is 50. I don't know why it's showing 47 here, because I bought some Bristol Myers at 44, but I got out of the trade. But I guess it didn't change the average price. So my true cost on Bristol Myers is actually 50. And the next premium that I can collect is going to be, let's see what it's potentially worth. So if I want to sell, let's say September 20th at a 50 strike, because that's my cost, I don't want to go lower than my cost, I'd collect $23. So yeah, pretty weak. So that's like 0.5% in 1 month. So it's 6% per year. So it's like a dividend. I mean, Box dropped hard. I'll have to wait for it to recover. I got Goodyear tires as well that also dropped hard because of the market correction. And now my iron condors and my credit spreads, for example, on Netflix, expires in 2 weeks. I need Netflix to trade above 310 for me to keep my full profit on this one. And I also needed to trade above 320. So I need Netflix to trade above 320 come August 16, or else it's going to cost me. Nvidia, even if it took a big drop, I love Nvidia. Premiums are so high, and I like it a lot actually because the stock itself I think is well priced. I think it's pretty low. Six Flags, my true cost is 54. Stock is trading at 51, so I probably won't be collecting a high premium. So SNC is my only Canadian stock in my margin account. What next month's call premium looks like. So August, so let's go September 20th. At a 22 strike, I could collect probably 35 cents. So it's not bad. So $35 divided by my 22 strike is about 1.5%. But I mean, as soon as the market corrects itself, if it goes back up in the next 2 weeks, I mean, all these premiums will be worth much more. I need the SPY to trade basically above 290. I need it to trade above 290 come end of August. So I still have time for the SPY. Tesla by August 30th. Right now I'm safe with Tesla. I'm inside my range, but hopefully I stay inside that range come August 30th, or I could probably close it earlier for a small profit. Uber is not doing so bad. Bought it at 40, it's trading at 39. It expires in 2 weeks, but let's say I want to see what I can get for September, keeping the same strike. I could collect about 80. So 80 cents on a 40. Cost is 2% per month, which is not bad. But earnings is coming soon, so I think after earnings, the premiums will drop for sure. But hopefully the stock goes up. I've got work that's not so bad, trading at the same price. Weight Watchers, it had earnings today after market hours actually. And look, it went up to $25. Very close to my strike. So that's not good because my strike is 25. I don't want my shares to get called away at 25 because my cost on this is about 27.5. So I'd be losing $2.50 per share if I get called away at 25. So I want Weight Watchers to stay below 25 come August 16. It's already trading at 24.99. So we'll see what happens. I still have 2 weeks. It might drop a bit. If I have to, I could probably just buy back the option and then sell another one at the same strike. So my portfolio increased by $60 from yesterday. We'll see what happens tomorrow. But I mean, the market dropped 700, 800 points on Monday, and then today it's up 300 points. The Dow Jones, for example, is up 300 points. So most likely tomorrow it's gonna drop. Like if I take 2018 as an example, we've had many weeks where the market was up one day and then down the other day, almost the same amount of points. This week, actually, it's not the same amount. We dropped 700 Monday, but we went up 300, so we're still down overall. And as you can see, the Canadian market dropped hard today. All right, so if you have any questions, any comments, any suggestions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Also, check out the other referral links in the description below. Thanks for watching.